Pablo, good to see you. How you doing? How you been? Come on, good to see you, as well, brother. How you doing? How you been? Manny, good to see you. As well. How you doing? How you been? Billo, good to see you. As well. How you doing? How you been? Evening, good to see you as well, Manny. Funky brother, good to see you as well. Evening, how you doing? Billo, how are you? I'm doing great. Any XRP news? Not much, just on the whole what was revealed on Telegram regarding the stablecoin. Good evening, Miles and CMF. Good to see you as well. Free and forever. How you doing? How you been? Dennis, good to see you as well. How you doing? How you been? Good evening, XRP homie. Let's go, funky brother. How you doing? How you been? By the way, thanks so much to everyone that's retweeting this live show right now. Retweeting and also liking the live show as well. Is RLUSD live? No, but it is getting closer to a live date. So I'll do a gist of what we're going to go through on tonight's live show, and then we do the intro, disclaimer, and by that time everyone's tuned in for the first part. On tonight's live show, we're going to be going through a mixture of topics, plus Q&A as usual. Hi, Miles. Tell us something good. Let's go, G. How you doing? And Mike, good to see you. How you doing, brother? Evening. Good evening, Miles and CMF. Missed yesterday. I was in an event till late. No problem. Denise, good to see you. How you doing today? Hey, Miles. Woodhouse, good to see you. How you doing? Morning, Miles and CMF. Shelly, good to see you. How you doing? Morning. How's it going? It's going great, Woodhouse. How's business? Business is good. How's your business doing, Woodhouse? And here's a gist of what we're going to go through on tonight's live show. So if you are watching this for the first time ever, welcome to the CMF live show. On this live show, we talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, and in this case also some brewings of a war going on. How are you, Miles? How are you doing, Miles? I'm doing great, Callie. How you doing? So on this live show, we are going to be talking about the US inflation data that's about to be coming out soon, which could affect the market hugely, depending on what comes out on that data. We're also going to be talking about the Hong Kong regulations. So Hong Kong is going to be tightening its regulations for the next 18 months, getting prepared to turn Hong Kong into an absolute beast of a crypto hub. We're also going to be talking about tonight's live show regarding Africa as well. The African Union has just approved AI strategies to propel developments across member states. Africa is going to become a massive hub for AI technology, and they have plans drawn out until 2063. So there's a lot of developments happening in Africa. We're also going to talk about tonight's live show regarding the $1.7 billion in Bitcoin leaving exchanges. There's something odd happening throughout all crypto exchanges, where a ginormous amount of Bitcoin is being withdrawn from many exchanges. We're going to go through what's the possible reason behind this scenario. We're also going to be talking about tonight's live show regarding Wells Fargo as well. Wells Fargo is going to be revolutionizing finance with Bitcoin ETFs in their own words. We're also going to talk about tonight's live show regarding the economy and how the French economy could be on a verge of some sort of bankruptcy situations. A lot of businesses might be on the verge of bankruptcy in France. That could impact the market space as well. We're also going to talk about tonight's live show regarding the US dollar's global reserve shares falling to 59% this year, which is quite a drastic drop. So mixture of news to go through regarding some recession situations, some updates you should know about regarding some bankruptcies that could come out of France on a large scale, and regarding Hong Kong tightening their regulations and the African Unions coming together for AI Hub. And there's so many things regarding inflation data that's going to be coming out soon as well. So a mixture of news to go through on tonight's live show. And obviously the first news we're going to go through is regarding the US inflation data that's going to be coming out, which is going to have a very massive impact on the market space, depending on if it's good news or bad news from the US inflation data. But before we go through any of that news, welcome to the CMF live show once again. On this live show, talk about most recent things that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, and regulations. You can tune to this live show every single night on X Live or on YouTube Live. You can watch it on both. And we also do live Q&As as well, which means if you have any questions, put it down in the comment section. I'll be more than happy to answer any questions you may have. And the disclaimer of tonight's live show, as always, is not financial advice, not political advice, and what advice is only for entertainment purposes. Also, go and check out our essentially partnerships and sponsorships, which one of them is Bing X. Go and check out Bing X. The link is on one of the tweets I have made recently, and they'll give you $100 just for signing up for Bing X Exchange for being a member of this live show. Or also, if you want to secure your crypto assets, you get a Tangent wallet for yourself, get 10% off, use code CryptoMiles. So, welcome to CMF Live Show. If you're watching this for the first time ever, and if you're regular, let's go CMF. The live show has officially started now. Just like yesterday, we'll do a lot of Q&As as well. We'll do more Q&As every live show. So, if anybody's got any questions, just like yesterday, throw them out as well. But the first news we are going to go through is regarding US inflation data. But before we go through that, let's go back inside the comment section. If there's anything to answer, business is doing great. Let's go Woodhouse. Troy, hi, Miles, the family. Good to see you as well. So, US. Should we all brace for the incoming US inflation data? The countdown has begun. Next week, the US will drop its latest inflation data, and everyone in the market is holding their breath. Inflation is always a very hot topic, but right now it's even hotter. After months of data showing a mixed bag of numbers, the stakes are high. So what's really going on with inflation inside the US? In June, it cooled down a bit, hitting 3% annually. That's a drop from the 3.3% we saw in May. Sure, it's not a massive decline, but it's a step in the right direction. What's more interesting is the monthly rate for June, which actually dipped by 0.1%, minus 0.1%. That means that overall prices didn't just stop climbing, they fell a bit. It's a small victory, but in this economic climate, even the smallest win matters. Inflation breakdown, what's moving, what's not. Let's break down the numbers. The core inflation rate, where they strip out the wild swings inside food and energy, went up by 3.3% over the past year. That's the smallest increase in core inflation since April 2021. Why does this matter? Because it might mean that the underlying pressure pushing the prices up is easing. Energy prices, for example, are finally chilling out. In June, energy inflation was only 1% and a big drop from the 3.7% in May. What caused this? A drop in gasoline prices, which fell by 2.5%. Less pain essentially at the pumps is always good news. On the flip side, food inflation is starting to creep up again, moving from 2.1% in May to 2.2% in June. This is not a huge jump, but it's enough to make you notice when you're at the grocery stores. Meanwhile, shelter and transportation costs are finally easing up too. Shelter inflation dipped from 5.4% to 5.2%, and transportation dropped from 10.5% to 9.4%. All eyes are on the Federal Reserve right now. The Federal Reserve has been wrestling with how to keep inflation in check without totally choking off economic growth. The big question now is whether they'll start cutting rates before the year is out. With inflation cooling, unemployment ticking up, and job growth slowing down, the Fed might just decide to pump some life back into the economy with a rate cut. It's all about finding the sweet spot between fighting inflation and keeping the economy afloat. Now, let's talk about essentially the jobs report from August 2nd that came out. It was weak enough to send global stocks markets into a tailspin. Investors are jittery, and the data coming out next week could be the tipping point for markets already on the edge. If the numbers show inflation picking up again, it could spark another round of sell-offs. Nobody wants that, but it's a real possibility with the data coming out next week. Speaking of rate cuts, investors are already placing their bets after the disappointing jobs report. Many were quick to predict that the Fed would slash rates. We're taking essentially big cuts like 4 percentage points by the end of the year. That would mean that half-point cuts are essentially at one of the Fed's last 3 meetings of 2024, considering the current interest rates are sitting at a 23-year high between 5.25% and 5.5%. That's a bold prediction. But hold up, some of these extreme bets have already been walked out. The market is unpredictable, and so is the Fed. Investors are hopeful, but hope doesn't always pay off. What we know is that everyone will be glued to inflation numbers when they do drop next week. Any sign that inflation is creeping up again will shake up the markets to its core. It definitely will be, yes. Once the inflation, essentially, the data comes out next week, it's going to be quite interesting, because if it's not what we're expecting, then the market is obviously going to be very volatile. If it's good news, then we're going to be going up, and if it's bad news, we could be drastically going down. But also, what adds onto this whole inflation data coming out next week is the high tensions that's again erupting with Iran and Israel. So these high tensions right now are happening. Inside sources from Iran have revealed that there could be a possibility of a war brewing in Iran. Iran has already, from inside sources again, has revealed that they've essentially called out that no planes should be flying over certain parts of Iran. Iran has said that they're doing some, military action testings, but you can't take the Iranian government's word for it in any sort of a way. And Israel also has high tension. Israel's also on high tension because they don't believe that Iran's doing military testing. That's the reason why they've called off any planes flying over certain parts of Iran. But that's what's brewing right now. And many people in Iran's previous army generation have been called in to maybe get prepared for some sort of war, but nobody has been given a timeline on that matter. But the Iran situation of calling off planes not to fly over certain parts of Iran, that's raising many questions. So with next week essentially coming out on the inflation report datas, and by next week we can have a high tension between Iran essentially and Israel again, that's definitely going to add on to the market weight. But also we have France on one side of the market space as well, going through some difficulties, and major bankruptcies apparently are coming from France. There's going to be major crashes and essentially the French economy with major bankruptcies on the way. So we have France's economy going down the toilet slowly. We have Iran's high tensions once again telling everybody not to fly over certain parts of Iran. And we have the inflation data also coming out next week. It's going to be a beautiful market space. It's definitely going to be, extremely volatile. If all of those things happen all at once, then the market is going to be extremely volatile, genuinely. So you want to be prepared in these types of situations inside the market space, because a lot of things can happen. You can make incredible amounts of money, or it could go the other way around if you're not prepared. Obviously not financial advice in any sort of a way, but three major things are on the way. One, inflation data coming out. Two, high tensions with Iran once again. And three, the French economy is not doing too well. Now, we're going to talk about more on the French economy as well. And but interesting enough, all of this is happening when we're going into CBDCs and social credit systems and so on, and control and so on. But there's so much actually happening where some could be used as distractions once again, or there could be some other things planned behind the scenes as well. Some things that I've revealed in the Telegram group on this live show, for example. But yeah, there's three major things happening that can all have a massive role inside the market space. So if you were, waiting and expecting lower prices inside the market space, inside the crypto market space, or the stock market space, with these three things happening with the inflation report, it's going to make the market volatile, crypto and stock. And with Iran's high tensions telling everybody not to fly over certain parts of Iran and telling previous army generals to prepare for something, that's definitely going to be causing high tensions in the market space. So if you're expecting lower prices in the market space, this could be your time to get prepared for getting ready for some scenarios of market downward trends happening. One, because of high tensions of Iran from insider sources. Two, because of the inflation data coming out. It's never good news when inflation data comes out. And three, because the French economy is not doing too well, there could be major bankruptcies along the way from the French economy, which we're going to go from the French economy as well on tonight's live show. Now, the next news we're going to talk about tonight's live show is regarding Hong Kong, but we'll talk about the French more on this live show. But the next news is regarding Hong Kong on tonight's live show. But before we go through that, let's go inside the comment section. By the way, if you have any questions, put it down inside the comment section. This is a live show, which means, as usual, every single night there's a Q&A, it's a live Q&A. So if you have any questions, put it down if you want answers to them. Let's see what's going on inside the comment section before we go talk about Hong Kong and the French economy. Did this not charge? Maybe not. There we go. Okay, so about that wireless mouse sometimes has issues. Let's go back to this. Let's see what the questions are. Here we go. We were here. Troy, let's go. How you doing? Every bloody month, reports and data comes out, and the crypto drops again and again. Well, every time that happens, it creates buying opportunities. I'm getting sick of this BS data regarding the Fed reports. Good evening, Miles, the CMF. Orphan, good to see you. How you doing? How you been? Hey, Miles and family, is XRP having a shutdown / reset in 2 weeks? Saw something about this. Okay, so regarding XRP, there's some rumors going around. It's going to go through the switch is about to be flipped. What's actually happening is that on the XRP Ledger testnet, they're going to reset the network for about 15 minutes. Is what's actually happening, and people are using this as some sort of fuel and speculation that they're going to be flipping this switch. But in reality, it's just the XRP Ledger testnet is going to be switched off for a 15-minute reset. There could be a more of a bigger reason behind on why they're doing this, but for now, that's what we know on paper. The rest is just speculation. Even Miles and family, bless up, Ian. Good to see you as well. How you doing? How you been, Ian? Maybe that's the start of pushing out CBDCs. Maybe it is, regarding the high tensions going on. How does your intel feel about this, Miles? How does my intel? No, how does the insider familiar sources feel about this? So, a lot of people in Iran have received phone calls from the Iranian government. If you were a previous ex-military in Iran, you would have received a phone call by now, and the government would have told you that you need to get prepared. They won't give you a timeline or a deadline. They just let you know you have to get prepared because you are going to be called in. So a lot of people in Iran who are ex-military generals are now being called in from insider sources, and they've just told them to prepare. They've told them to prepare for something. They haven't given them a timeline or a date. They just said, be prepared. When we do call you, you will have to come in. So Iran is getting their ex-military generals ready for something. And Iran has also closed off many airspaces, so no planes can fly around on top of Iran's skies on certain cities. Israel has noticed this, and also Iran claims that they've only done this because they're doing military testings, which nobody's buying. When is Japan going to sell their 800 billion USD treasury? When is... By the way, I'm reading everybody's comments one by one, so I'm going to get to everyone's comments. I don't ignore anyone. Maybe that's the start of, nope, I already read that one. Okay, I'll see. When is Japan going to sell their 800 billion USD treasury bonds? Well, they're not going to, in reality. So regarding the US Treasury bonds, they're actually used to back quite a lot of stable coins and quite a lot of crypto projects. I know the ideology is, we have to get rid of the US dollars and because they're printed too much and too much inflation. But in reality, a lot of countries, a lot of crypto projects, a lot of stable coins actually use US bonds to back their stable coins with. So the US dollar bonds, Treasury bonds drop in sort of value. It would damage quite a lot of stablecoins valuations as well. I mean, for example, USDT holds quite a lot of US Treasury bonds, a ridiculous amount they hold, which could damage essentially their assets and their portfolios and possibly even repeg their essentially stablecoin dollar. But regarding Japan selling off their 800 billion USD Treasury bonds, they're never going to. So what happened with Japan's economy in a very short, simple way? Because the economy was going through a crisis, the Central Bank of Japan borrowed US dollars from the US and used that US dollars, the central bank, to buy US Treasury bonds from their commercial banks. So their commercial banks don't dump on the market their US Treasury bonds. The Central Bank of Japan borrowed money from the US. They used that US dollars to buy the commercial banks' holdings of their US Treasuries, so they don't dump it on the market and hurt the economy, essentially for the US side. So that's what's actually happening. It's just one big loop. So they're not dumping it. They're actually buying them. The Central Bank of Japan is buying them out. So nobody dumps it. And they did that by borrowing money from the US, by giving them yen, in other words. Scrolling through the lives on YouTube, you came up. How you doing, XRP Peaky? Hard to see chat for anyone else. Yeah, the chat's a bit mixed, that's why. But welcome to the live show, XRP Peaky, version 2. Hi Miles, it's Cardano. Long time, brother. Cardano, good to see you. How you doing? Has been a long time. Why is your name Shiba Inu on YouTube? You switched sides from Cardano to Shiba Inu. Heard Japan has been buying gold and is going to sell bonds and black yen with gold, Miles. Japan has been buying quite a lot of gold, just like any other jurisdiction out there. Russia's been buying quite a lot of gold. So is China. So is Japan. Hong Kong's been quite a lot as well. Iran's been buying quite a lot as well for a while. So is Brazil. So is South Africa. So a lot of countries have been buying gold because right now we're going through some turbulence and they're seeing it as a major safe haven. Yeah, just realized I have to minimize the chat on the phone. No problem, XLPP keep. So, Hong Kong. Hong Kong to tighten crypto regulations even more. Hong Kong is about to tighten its crypto regulations, waiting to take up the notch in the next 18 months. This is a part of a bigger plan to solidify the city as a global financial tech hub. Hong Kong is definitely trying to still lead and become a financial hub, become a crypto hub in general. It's the same way Dubai is trying to become a crypto hub, or essentially Tokyo is trying to become crypto, or London, or Singapore. But Hong Kong is now getting ready to tighten every lead they have on cryptocurrency regulations for the next 18 months. Things are going to get very strict in Hong Kong in terms of crypto regulations, not in a bad way, but in a positive way. The tighter the rules become in Hong Kong in terms of crypto regulations, the more institutions will enter and banks will enter inside the crypto space due to a safety net that will be created from the regulations, which means more money will be entering the crypto space over time within these 18 months. But also expect a lot more manipulation with more directors and CEOs and company owners entering essentially the crypto space and bankers entering the crypto space. Always expect a lot more manipulation, but also expect a lot more money. With more money, there's always more problem. The goal is reportedly to create a secure, well-regulated environment that doesn't just protect investors, but also attracts serious crypto players. As I said, tightening regulations actually helps to bring more money inside the market space from bankers and essentially and the corporate sector in general. So by tightening these regulations, it's going to attract some serious crypto players. And by serious crypto players, it's the bankers. So David Chi, a member of Hong Kong's Legislative Council, laid it all out for us at the Foresight 2024 Summit. According to him, the city wants to pull in tech talent, build out new infrastructure, and most importantly, hammer out some serious legislative oversights for the crypto industry. A new framework on the horizon. She acknowledged that while the industry has grown its early days, in his words, we're still in the early stages, but we need to establish a sound exchange system and get legislations in place for stablecoins soon. And by soon, he means before the end of this year. Stablecoins are set to become a regulated thing in Hong Kong, with rules expected to drop before 2025 hits. The government is already testing the waters. Sandbox tests are underway, and Chi made it clear that in the next year and a half will be important. The focus tightening supervision and making sure that the new laws actually have some teeth. He told us that the government would push projects teams to experiment with new financial products in the city, licensing, stablecoins, and more. Hong Kong's already got a few things in place, like its licensing regime for virtual asset service providers. The Securities and Futures Commission is one handing essentially out these licensings, which are required for managing crypto assets exactly a year ago. The SFC had given out 11 Type 9 licenses and at least one hybrid license as well. These licenses come from a catch firms, have to meet strict operations and risk management standards as well. The goal was to boost investor confidence and keep the market from going off the rails. On the stablecoin front, the Hong Kong Monetary Authority is set to roll out a mandatory licensing regime in 2024-2025. Stablecoin issuers will need to meet tough standards around capital, liquidity, and risk management. Something on the lines of what the EU through the MiCA regulations introduced is what's about to be introduced in Hong Kong. By the end of the year, Hong Kong will have full regulations in terms of stablecoins and some other regulations in place as well. The Hong Kong Monetary Authority wants to minimize their risk to the financial system, and then there's tokenizations that's going to be happening. The SFC has already sent out circulars to clear up how tokenized securities fit into the bigger picture of Hong Kong's market space. They've made it clear that these are subsets of digital securities and there are strict rules intermediaries need to follow. We're talking essentially about the risk management, proper disclosures, and through due diligence to protect investors. The SFC is even considering allowing the tokenizations of real investor products as well. So, Hong Kong is about to be getting extremely tight. Is this good or bad? It's extremely positive. The tighter the regulations, the more institutions that enter the crypto space. The more institutions that enter the crypto space, the more money that enters the crypto space. But the monies will be going towards essentially legitimate crypto projects. So if you're expecting money to enter, Pepe's granddad, that's not going to be happening. But money be entering essentially XRP, XLM, XDC, AVAX, Solana, and so on, or Bitcoin, Ethereum. Those are types of projects that will be entering into, not in the sense of Pepe's granddad, what Hong Kong is aiming for, but with tighter regulations is what always comes. Now, on the basis of their stablecoin regulations, it seems like Hong Kong is taking a page out of the EU regulations as well. The EU has the MiCA regulations, very strict on stablecoins, and obviously USDT did not pass the test to be allowed to be used in the EU regulations basis. Many exchanges have delisted essentially USDT, and Hong Kong could be on the same stage of maybe on a possibility of delisting USDT, not now obviously, but in near future times, probably this year. But yeah, and they're taking a page out of the EU, bringing on stablecoin regulations by the end of the year. They're saying they're playing it as a crucial part of Hong Kong's monetary authority system, but also more regulations for the next 18 months are going to be happening inside of Hong Kong. So expect a lot more, essentially, corporations entering the fields from Hong Kong, which is all positive news. It just all adds up to more money, but more money equals more problems. With more money inside the market space from bankers and Wall Street dudes, obviously expect a lot more manipulation. But if you're in the right projects and you hold on tight enough, you could come out the other side with a lot of money. Not financial advice in any sort of a way. But the next news to go from tonight's live show is moving on from Hong Kong. We're now going to be talking about the African Union, and after that, we're going to be talking about the French government. But the African Union is also coming together and trying to become a AI hub. So as many countries are leading the way to become a cryptocurrency hub, like Hong Kong or the United Arab Emirates or Saudi Arabia or to, Singapore or even Tokyo or even London, Africa wants to become the essentially AI hub rather than the cryptocurrency hub. And they have a plan set out for at least 2063, which is a massive, crazy plan to have. From now until 2063, they're just going to be doing back-to-back investments into AI technology. Before we go through that, let's go inside the comment section first. I'm a fan of a lot of cryptos, not just Cardano. Let's go Cardano. Next week, I'll be looking at my portfolio, so I won't feel any pain. Let's go, everyone. Hello, Miles. Lena, good to see you. How you doing? You are a very eloquent fellow and come off as very informed, thoughtful, and insightful. I've noticed many new to me channels appearing on my feed lately. Glad to meet you. XRP Peaky, thank you so much for the kind words, brother. And welcome to the CMF live show. And welcome to the CMF. Hi, Miles. Is war going to start soon? Is that why crypto is dropping? Yes, there's a hint of a war type of situation possibly on the way, due to Iran, again, from insider sources this time around, revealing that they're getting ready for some sort of war scenarios. They've already closed up many airspaces in Iran. And many people that were ex-military have been called in, that were ex-general militaries, being called in by the Iranian government to be prepared for once they do get a call, they have to come in and lead some sort of assessment. Many countries, have realized this as well. So as Israel, they've realized that Iran is making some random calls. And they've also realized that Iran has closed off many airspaces. Who do you think will win? It's a bit of an odd question on who I think is going to win. War is not about winning. There's no such thing as winning and losing. It depends on how you look at it. If you're an average person, don't do this to yourself, Jim. If you're a retail person, you're going to be looking at war and going, who's going to win and who's going to lose? War is about making money. As sad as that might sound, war is about making money. It's not about winning or losing in any sort of a way. People lose their lives all the time from natural causes or from eating or drinking, essentially dirty water. Every 6 seconds, somebody dies on this planet from drinking dirty water. So, look, war is not about winning and losing. It's about money, power, and greed. And the faster you understand this, the better it is for yourself. So you would have to essentially think to yourself regarding this war scenario is how can you make money from it? As sad as it might sound, but that's what you have to do. Look at it from only financial perspectives. Obviously not financial advice in any sort of a way. So if we do have a war, what happens next? Well, the market is going to be heavily impacted, the crypto market and the stock market. The US dollar will rise in value because it will be seen as a safe haven. Gold will rise in value because it will be seen as a safe haven as well. Silver will be right after it. Crypto will then do a U-turn straight after it as well. After going downwards, crypto will do a U-turn, start climbing back up because some cryptocurrencies will also be seen as safe havens in that moment in time for cross-border payments as well, because during times of war, you are not going to be using SWIFT and waiting for a month before the money arrives, because the war will probably be done within a month's time. So on those bases, cryptocurrencies will also be seen as a safe haven for cross-border payments. But first, the market will react and go downwards before some cryptos doing a U-turn, going back up because they're seen as safe havens, or some will be used for cross-border payments. But gold will be seen as a safe haven in general, so will silver, and the US dollar will rise in value again. These are things that happen during wars, pretty much every war. It's just the same cycle on repeat. You're right, it's financial gain only. Great answers. Jim, let's go. Brother Miles, do you think I should change all of my ETH and a bit of Bitcoin to stable coins for now, then maybe buy in afterwards? If you want to, it's completely up to you. If you want to do that, if we do have this war scenario, and if we do get the data reports coming out at the exact same time, and the French economy goes through major bankruptcies, then obviously the market will be heavily impacted. But that's only on the basis of if those things happen. If those things don't happen, then the market will be quite stable. So if the Fed reports come out and they're quite normal, the market won't react as much. If the war scenario once again dies out, as it usually does, then the market won't react and we'll still be where we are. And it could even climb higher. And so these are all outcomes. They're not guaranteed outcomes in any sort of a way. The Fed report could go either way, good or bad. The war scenario could be a possibility on the verge of happening, or once again, it might not happen. Regarding Iran, there's two groups that lead Iran, okay? There's technically three groups that lead Iran. There is the regular people who support the Shah. There is the lunatics that support the regime. And there is just people in between. So Iran has two armies, essentially. One is the government's army, and one is the normal army that the Shah used to use. The normal army of Iran does not want to get into any sort of conflicts or war scenarios. The regime army, which are just complete lunatics, want to get involved in some sort of war scenarios. So we would have to see, regarding Iran's matter, the lunatics will win or the regular people will stop the war. But there are many people in Iran who are asking for a war as well, because they see it as the only way exit. They see it as the only exit from this Iranian government. There are many people in Iran who support Israel, and they want Israel to start a war with Iran so they can remove this regime from Iran. And honestly, it is probably the only way to remove this regime from Iran. So the only way to remove the Iranian government is probably this scenario of Israel giving a helping hand, because nobody else is giving a helping hand to the Iranian people. So these are all, ifs and buts. They're all outcomes. None of them are actual guaranteed outcomes, but they're outcomes to weigh in on how the market could play out. Is it imminent, or have we got a bit of time? You've got a bit of time, is what I would say, but you don't know with this, essentially, the army that they do have in Iran, the government army, they are a bit cuckoo. So they think very differently. I'm being genuinely, not being funny in any sort of way, but they are a little bit cuckoo, the Iranian government army, that particular group of people. So you don't know what they're possibly thinking to themselves, because we have a normal army in Iran, which was the Shah's army, and then the People's Army, and then we have the other Iranian type of army that they have, which is the government army, and they are they're not all there. They're not all cylinders fire at once, is what I'm trying to say for those types of people. So they might do something drastic, or they might not, and they might be stopped. Because Putin could also have a major influence in Iran as well. And Putin is trying to slow down Iran on this whole scenario. But a war scenario could help the US dollar become a safe haven again and raise in value. Because in times of war, everybody runs towards the US dollars. Obviously not the retail section, but countries do run towards essentially the US dollar because it's seen as a safe haven. Many businesses, major Wall Street people will run towards the US dollar because it's seen as a safe haven. So once again, the US dollar will get strengthened in times of war, as always it does, with every war. Is it so? Regarding imminence, I heard that Iran and USA are talking, and it looks like everything is on hold. Unfortunately, not. Insider sources reveal something else. They're all getting called in by the Iranian government. Many people have been called in by the Iranian government to be prepared. Not regular people, ex-military generals. They've all been called in to get prepared, and when the Iranian government calls them, they have to be prepared to go in and lead some sort of an assessment. And Iran's already closed off many airspaces. Those aren't signs of a sit down or a talk down or holding off on something. Those are signs of there's some messed up people leading something in Iran. But we'll see how things plan out. In the next week or so, we'll see how things plan out. But yeah, Iran's playing it off as we're doing military testing. That's why we're closing off many airspaces. Now, the African Union approves AI strategy. As I said, many countries are trying to become a hub for cryptocurrencies, while as Africa is trying to become a hub for AI technology, which is a brilliant idea, to be fairly honest. But ironically enough, Paris wants to also become a hub for AI technology as well, whereas many other jurisdictions want to become a hub for cryptocurrencies. So, African Union approves AI strategies to propel development across member states. Aimed the massive crypto adoption, the African Union is embracing artificial intelligence as a key driver for development across the continent. The AU announced the approval of its continental artificial intelligence strategy, which is set to promote AI adoption across both public and private sectors within the member states of Africa. This strict move formally adopted during the AU Executive Council's 45th ordinary session held between July 18th and 19th in Accra, Ghana, aims to improve the well-being of its people. Key AI recommendations. Sorry, 1 second. Apologies about that, everyone. Literally came out of nowhere. The newly approved strategy lays out a comprehensive plan for integrating AI into various sectors across the continent. Among its recommendations is the creation of an integrated hardware and software environment designed specially for AI technology and machine learning workloads. This infrastructure will be essential for processing and deploying data at the scale required to fully utilizing AI technology. In addition to the strategy emphasizes the need to establish a robust governance system. This includes the adoption of AI technologies in the public sector and the promotion of tech within the private sector. In terms of enterprises, the strategy is closely aligned with AU's agenda of 2063. Africa has an AI roadmap ready from now until 2063. They're going to be doing back-to-back investments in Africa, not just some jurisdictions, but in general, the continent of Africa wants to go towards AI technology, which is massive news, which outlines the continent's long-term, essentially economic transformation goals from now until 2063. Do you know how much thinking and planning was needed for you to have a roadmap from now until 2063 of where you're going to be standing in AI technology? As well as the United Nations Sustainable Development Goals is also behind this. The United Nations is also behind this. Other significant focus areas include the establishment of technical standards to ensure AI safety and security, the acceleration of AI-related investments, and the enhancements of regional cooperation. Phased implementation. The AI strategy outlines a 5-year implementation period from 2025 to 2030, divided into 2 distinct phases. The first phase, spanning from 2025 to 2026, will essentially concentrate on laying the necessary groundworks in place. This includes establishing governance frameworks, mobilizing resources, and enhancing the capacities of the AU, regional economic communities, specialized agencies, and member states. The second phase is set to run from 2027 to 2030, will focus on the practical implementations of the critical projects and initiatives outlined in the strategy. This phase would aim to translate the strategic vision into tangible outcomes that will drive the continent's AI developments forward. In a related development, Nigeria also recently launched Africa's first ever multilingual large language model, LLM, in April 2024. That was announced as well. This milestone was spearheaded by Dr. Boson, the Minister of Communications, Innovations, and Digital Economy of Nigeria as well. But yeah, major things are happening essentially in Africa. Honestly, I've said this before and I'll say it again. You know how Dubai has always, or essentially the United Arab Emirates or Saudi Arabia has always been where investments go towards. Well, Saudi Arabia is, getting new investments coming in, but Dubai or in other words, United Arab Emirates has always been the hotspot for innovation in terms of technology and investments and so on. Africa is becoming that hotspot, believe it or not. Most people wouldn't believe this scenario of Africa becoming a hotspot, but you've got to understand is Africa has so much resources, it's unreal. They have so much money. They are an incredibly wealthy nation. They can become incredibly wealthy countries. It's just their governments are corrupt. Their people could be incredibly wealthy, genuinely incredibly wealthy, just their governments are very corrupt. But Africa looks like it's becoming the new hotspot for AI technology. A lot of jurisdictions are actually investing quite a lot of money in Africa, but also a lot of crypto platforms are doing major investments in Africa as well. There are many Bitcoin mining institution companies that are massive, that are doing $100 million investments in Africa. Russia is also doing $100 million investment in Africa as well. $100 million building a massive mining facility essentially in Africa, providing quite a lot of jobs and also free electricity to nearbys. Block is doing the exact same thing. Marathon Digital is doing the exact same thing. Ripple has also had some investments done in Africa as well. Standard Chartered Bank, massive British bank, has also done some major investments in Africa as well. One of Dubai's leading financial hubs essentially did some sort of cooperation or partnership with some leading investments that are happening in Africa as well. There's a lot of investments and there's a lot of things happening in Africa that nobody's looking into. So maybe start looking into projects that might be coming out of Africa as well, just to have people's eyes on it. Genuinely, I mean, these are things that you would have to look out for. If you always want to be the first person through the door, these are the type of news that you need to listen to essentially to be the first person through the door. Some people read this news and just shrug it off and go, it's probably nothing. It's probably nothing. Dubai will probably be still the best place for investments. And I'm not saying it isn't. Dubai is a great place for investments. So is Saudi Arabia, so is Kuwait, so is Bahrain. But Africa's becoming the new hotspot. Believe it or not, it's actually becoming the new hotspot. There are $100 million deals, billion-dollar deals happening over there right now for Web3, data, and it's also AI as well. Massive things are happening over there. And I'll definitely keep people updated on any sort of platforms or projects that get launched out of Africa as well. Now, the next news to talk about on tonight's live show is regarding Wells Fargo. Wells Fargo apparently wants to revolutionize finance, but they want to do it with Bitcoin ETFs. Now, before we go through that news, first I just want to tell you something I said a very long time ago, is that something I've also repeated quite often, is that institutions tend to follow each other. So massive corporations tend to follow each other's footpaths. I've always said this. I said an example with AVAX when, JP Morgan decided to use AVAX on a subnet green. Citibank decided to use AVAX on a subnet green. Corporations tend to follow each other. When MicroStrategy decided to buy a Bitcoin to back it as an asset for their company, Metaplanet in Japan decided to follow MicroStrategy's footsteps as well. And two also Canadian companies decided to do the same thing. But in general, corporations tend to follow corporations. It doesn't matter if they're outside of that jurisdiction or not, they just follow each other's footpaths. So with Wells Fargo essentially entering the Bitcoin space or Bitcoin ETF space or the cryptocurrency space in general, Wells Fargo actually mentioned the reason why they're entering the blockchain space is because of Morgan Stanley. You see, Morgan Stanley just set a massive milestone, which I revealed on the slideshow, which is about 15,000 financial advisors. And I said, do you know how confident you have to be as a major institution with $1.5 trillion assets under management? Do you know how confident you have to be to get 15,000 financial advisors ready to enter the space? So with that confidence that Morgan Stanley has of providing 15,000 financial advisors to their high-profile clients to enter the crypto space, Bitcoin and ETF space first, but still major confidence, that confidence has spread like wildfire throughout Wall Street, where people are now looking at Morgan Stanley and thinking to themselves, why is Morgan Stanley getting 15,000 financial advisors helping their high-profile clients to enter the blockchain space? Maybe this is something that we should be looking into, because Wells Fargo has decided to enter the space as well after Morgan Stanley being so confident. So we're going to go through that news as well. But before we go through that, let's go inside the comment section first. Let's see where we were. Bottom. Let's see. I think we're here. Hello, Miles and CMF family. Just got here. Whatever you're talking about sounds scary. War between Iran and Israel looming. Yeah, Brian, there's some sort of scenarios going on there. But I'll definitely keep you all updated. Facts, Africa is a wealthy continent. Please let us know about the projects when it comes to light. No promptings anytime. Yeah, definitely. I will. Now, Wells Fargo. Wells Fargo to revolutionize finance with Bitcoin ETFs. Wells Fargo is on the brink of a major financial shift, preparing to introduce Bitcoin ETFs to its clientele as well, just like the 15,000 financial advisors from Morgan Stanley. A move set to transform how traditional investors access cryptocurrencies. This strict decision mirrors a broader trend as a leading financial institutions increasingly embrace digital assets. The anticipated launch of the Bitcoin ETFs by Wells Fargo signifies a significant pivot towards integrating cryptocurrencies into the mainstream financial services. This development comes in the wake of a similar move by Morgan Stanley, which essentially recently added Bitcoin ETFs to its brokerage offerings. However, these funds are currently unavailable in advisory accounts, which manage about 60% of their client assets. This limitation underscores the evolving nature of how cryptocurrencies, particularly Bitcoin ETFs, are being moved essentially into the traditional investment strategies. The rising tide of Bitcoin ETFs in traditional finance. Wells Fargo's foray into Bitcoin ETFs is more than a mere expansion. It's a reflection of broader industry's trend. The major financial players, including Morgan Stanley and soon UBS Bank, are responding to the increasing client demand for secure and regulated cryptocurrency investment options. The move signals a systematic shift in the financial landscape as these institutions adapt the growing interest in digital assets. UBS Bank is also poised to follow Morgan Stanley's footsteps from their 15,000 financial advisors. It is expected to unveil similar Bitcoin ETF products shortly as well. The rapid adoption of Bitcoin ETFs by these banks giants illustrates the intensifying competition and the urgent need to cater to investors seeking exposure to digital assets. The coverage of traditional finance with the world of cryptocurrencies is reshaping investment portfolios and creating new opportunities for investors. Industry reactions, essentially caution and enthusiasm. The industry response to the growing presence of Bitcoin ETFs has been a mix of excitement and caution, while the introduction of Bitcoin ETFs has been welcomed as a significant advancement. Experts like John Reed Stark, former chief SEC enforcement, have raised concerns about the associated risks. Stark has highlighted the challenges financial planners face with recommending high-risk assets such as Bitcoin ETFs, especially in the light of the new rules from the CFP board about the emphasis in the need for careful risk assessment. So with Morgan Stanley getting ready with 15,000 financial advisors entering the fields, which they did a few days ago, which is massive confidence. You've got to have big kahunas to be coming inside a market space, any sort of market space, especially a new market space with 15,000 financial advisors. You're definitely setting a massive voice, which is why essentially Wells Fargo decided to follow the exact same footsteps, and so did UBS Bank. They decided to follow their footsteps as well. Now, on that basis, John Reed Stark, essentially a former chief SEC enforcement officer, has came out and said this is a terrible idea for the Morgan Stanley 15,000 financial advisors, for Wells Fargo and UBS to be entering the ETF space. Obviously, John Reed Stark does not know what he's talking about. He must be related to Gary Gensler, which is basically essentially sharing the exact same brain cells as a goldfish. Stark has highlighted the challenge of financial planners faced with recommended high-risk assets such as Bitcoin ETFs, especially in light of new rules from the SP board, and emphasized the need for careful assessments. Despite these concerns, the appetite for Bitcoin asset ETFs remains robust among both retail and institutional investors. Recent launches by firms like BlackRock and Fidelity underscores this trend. BlackRock, iShares Bitcoin Trust, and Fidelity's Wise Origin Bitcoin Fund have gathered notable investor interest, demonstrating a preference for regulated and SEC-compliant cryptocurrency investment vehicles amidst volatile market conditions. The growing acceptance of Bitcoin ETFs, the integration of Bitcoin asset ETFs into the mainstream financial offerings, represents a watershed moment for the traditional investment firms. This increasing acceptance of digital assets is not just a fleeting trend, but a substantial shift in investment paradigms. Firms such as Millennium Management, Kaplan Management, and Schofield Essential Street Advisors are also expected to follow suit. One by one, Wall Street firms are following exactly the same footsteps of Morgan Stanley. One by one, Wall Street firms are following Morgan Stanley. Further cementing the legitimacy and growing acceptance of Bitcoin ETFs with conventional finance. This transition highlights how Bitcoin and other digital assets are moving from the fingers of financial systems to becoming integral components of diversified portfolios. As more financial institutions embrace Bitcoin ETFs, the potential for improved liquidity, increased market participation, and greater stability in Bitcoin becomes more pronounced. The future of investments. Wells Fargo impending launch of Bitcoin asset ETFs is a landmark development in the cryptocurrency investment arena. It underscores the escalating demand for digital assets and signifies a shift in how traditional finance ecosystems are adapting to new investment trends. The entry of major players like Wells Fargo and UBS into the Bitcoin ETF market space is reshaping the investment landscapes, providing investors with more choices and easier access to evolving asset classes. As financial institutions continue to integrate Bitcoin assets ETFs into their offerings, the cryptocurrency market is likely to see enhanced participations of the demands of modern investors. So here's just in a simple gist. Last week, I reviewed on this live show that the next essentially wave of customers for the crypto space are institutional investors. The market space in general is getting ready for institutional investors. When we had that recent market dip and everybody, panicked and decided, I don't know what to do, essentially, in that moment though, where everybody was panicking for no apparent reason inside the crypto space, I've never understood anyone that panics inside of a market space. It just doesn't make sense to me. Why would you panic inside of any market space? If you're the type of person to panic, you shouldn't be nowhere near any sort of market space. Not financial advice, it's just better for yourself. So when we had that recent dip inside the market space, what actually happened was quite a lot of institutions were buying out the retail section. The data was there to prove it. Now, putting that to one side, many cryptocurrency platforms have revealed that they are getting ready for the next wave of clientele. And the next wave of clientele is not more from the retail section, it's actually institutional investors. And they revealed this about a week ago, which I reviewed on this live show. And interestingly enough, as we've been going through this week as well, I've talked about how the next clientele is institutional investors because more crypto platforms have also revealed that as well. And now we are hearing news of people following the footsteps of Morgan Stanley, UBS Bank entering the space, Wells Fargo entering the space. Many other traditional, essentially Wall Street firms are also entering the crypto space as well. One by one, they're all entering right now because they are genuinely the next clientele for the crypto space. With the amount of regulations that we have in place, with the amount of banks that we already have inside the crypto space, or even institutions, we're about to get a lot more institutions, a lot more banks, a lot more tighter regulations. These are all indications when we have Wall Street firms lining up back to back to join the crypto space. Massive indications, genuinely. Now, here is something that I was talking about as well regarding the war scenario and the French scenario. So there are three outcomes right now weighing out in the markets. One is the Fed reports that we could possibly have the Feds next week coming out with the data, and it can be bad news. The market becomes extremely volatile. It could also be good news. The market remains quite stable and goes slightly up. So that's one outcome that's going to be coming out next week. The other outcome that we have on the table is that Iran is actually getting ready from some sort of war scenarios once again, which would make the market space quite volatile. But we also have another outcome on the table as well, which is the French economy. Everybody talks about the US economy sliding downwards. The French economy is going through some bankruptcy situations. So here's some economy news that could also impact the crypto markets and stock markets. Real estate prices continue to fall, and bankruptcies of agencies are skyrocketing in France. Real estate, long seen as a safe haven in France, is now fluttering under the weight of formidable economic and political forces. While the sellers are facing a reality where prices continue to plummet, real estate agents see their future darkening at an alarming rate. This once thriving market, which experienced years of uninterrupted expansions, is now going through an unprecedented crisis, an eventable but necessary decline, according to OP. The French real estate market is going through an adjustment period that seems eventable in the eyes of the Gulman Murray, president of the OP network. Interviewed by the BFM Business, he states that property prices must continue to fall to allow for the resumption of a restart type of situation of transactions. This perspective is rooted in a market reality marked by the limited supply of goods and a weak demand. Exacerbated by the prevailing economic uncertainties, for Marinade, the price correction, although it has already reached 7%, is still insufficient to essentially relitate a slowing market. Prices will continue to fall, but slightly, because we remain a supply tension. He specified, essentially emphasizing that this trend is essential to unlock sales and revive the market. Despite the recent interest rate cuts initiated by the European central banks, the real estate market is struggling to regain its once presented space. Sellers often reluctant to lower their prices, contributing to a form of inherent that hinders recovery. According to Marriott, this price drop is not just a consequence of economic conditions, but a sign, essentially, of conditions for transactions to resume at a normal pace. Despite these challenges, he remains optimistic about the market's ability to stabilize, but only if sellers accept to lower their expectations and adjustments that OP actively strives to promote with its clientele. So it seems like I'm going to read more onto this as well for everyone, because this is quite important news for everybody to hear about. I mean, when we had the Japanese crisis inside the crypto space, it definitely impacted our markets. Now, if the French economy is going to have major bankruptcies back to back, like a domino effect, it's definitely going to impact the crypto market as well, also stock markets. So it seems like we're having a major crisis in terms of real estate happening in France. And because real estate is a massive, massive market space, and we have massive, massive agencies running the show, those agencies are on the verge of going bankrupt. Massive real estate agencies are on the verge of going bankrupt in France due to nobody wanting to buy a property. And the people that nobody wants to buy a property, and the people that do want to buy a property, they can't find lower prices, because the landlords won't essentially lower the price in any sort of a way. So prices are too high. There's a supply-demand type of issue going on right now, where real estate firms are stumped. They can't sell anything to anybody. And that's a bit of a major issue, because they are on the verge of going bankrupt. And if they start going bankrupt and nobody could be fooled in anything, lots of people lose their jobs, a lot of houses are going to go skyrocketing down, landlords are going to lose quite a lot of value. So massive chaos is going to be coming out of France, in other words, during their real estate situation. Now, the wave of bankruptcies hitting real estate agencies is quite ridiculous. As prices continue to dip, the devastating effects of this crisis are not limited to mere market adjustments. The real estate sector is undergoing a real earthquake, with an unprecedented wave of bankruptcies among professionals. According to the National Federation of Real Estate Agents, the FNAIM, over 1,120 agencies have closed their doors in the past 12 months, a figure that represents a staggering 112% increase compared to previous years. 112% increase of agencies closing down their shops. Now, we are getting to a stage where major, large, essentially real estate firms are going to start closing their doors and filing for Chapter 11 bankruptcies, which is definitely going to hurt and damage the French economy, which will damage the market economy. This phenomenon, which also essentially affects independent commercial agents, reflects a distinguished market where the drop in transactions and banks reluctant to grant credit have pushed many players out. These closures are essentially resulting of the dark hours of the 2008 subprime crisis, but with an even more alarming scope. Everybody was talking about how the US might be going through a 2008 type of situation, where the real estate market essentially crashed and took everything down with it. The stock market, everything pretty much collapsed because of the bankers, where the bankers were eating too much. The very simple way of 2008 to explain it was, in 2008, the bankers were eating too much. People inside of real estate in the banking world were eating too much at the bottom, they were eating too much at the middle, and the bankers were eating too much at the top. And everybody lost count of who's eating. And then we had essentially the real estate collapse happening on top of everybody's heads. And obviously Moody's, being one of the agencies who does the numbers inside the United States, decided to lie on the numbers and said the economy is doing great. And obviously 2008, we had a crash. So they're comparing what happened in 2008 and what's, again, going on inside the United States. Inside the United States, they're talking about a recession is maybe on the verge. It's not possible because we're going through voting time right now. If we go for a recession inside the US, it's voting time, which makes the current essentially Kamala Harris or Sleepy Joe look bad if we go for a recession during voting time. So if we're going to go for a recession inside the United States, it's going to be after voting time. So regarding the French economy could go into a recession if they wanted to. They could have a 2008 collapse if they wanted to, because nobody really cares on that basis. But obviously, it's going to damage the market space without a doubt. But the French aren't going through a massive presidential election, is what I'm trying to say. And obviously, the American markets are a much more bigger market space. But the French economy will still hurt the market space without a doubt. But these are also times where a lot of people will make quite a lot of money if you're intelligent enough with your moves, with the French economy going down the toilet. And also, a lot of people would lose money if they don't know what they're doing in times like this. Also, if you ever wanted to buy a property essentially in south of France, if you ever wanted to own a villa, maybe start looking into real estate agents, because they are desperate to make a sale. You could probably get the best price you wanted for that villa that you can never afford in south of France. You might be able to afford it now. But it seems like the French economy is about to go through a 2008 crisis of real estates. So facing this hemorrhage, recovery prospects appear limited. Recovery prospects appear limited. The crisis seems to be settling in for a long haul, fueled by multiple essentially interconnected factors. Real estate agents, once the drivers of thriving markets, now find themselves navigating the troubled waters, with some even opting for career changes. Real estate agents are opting for career changes right now. The consulting bankruptcies translates an impeccable reality. The real estate sector, once a stronghold of stability, is now on its knees. These are bold words to be using. Real estate market once at a major stability, a stronghold, now it's on its knees. The French real estate market is undergoing a transformation. Caught in the wind whirls of the price drops and a series of bankruptcies, this crisis, far from being a mere essentially parenthesis, could essentially well redefine the sectors for years to come. If signs of recovery may emerge, they remain contingent on the generalized acceptance of the need to adjust prices and on the economy and political stabilizations. The coming months will deceive for the future of real estate in France, as the sector struggles to essentially reinvent itself in the face of unprecedented challenges. So the French economy is doing incredibly terrible. So they could be on the verge of a 2008 type of crisis situation. The US can't go through a recession. I mean, there are multiple news sources claiming that the US could go through a major recession of 2008. Some people are also, some analysts are also predicting a 1929 type of situation crash for the US. But it doesn't make sense for the US to go for a recession now. I'm not saying the US can't go through a recession, obviously can, but it doesn't make sense for the US to go for a recession now in any sort of way, because we're in voting time. This is when you vote for the next president. The US can't be in a recession, because if it goes for a recession, it makes Sleepy Joe and Kamala Harris look bad. I mean, they already look bad as it is, but we'll make them look 10 times worse, which means they can't go for a recession. But the French markets can go for a recession because they're not going through a major presidency situation. So if they're having trouble with real estate being one of the biggest market spaces in France, this could definitely damage their economy and definitely put pressure on the market spaces. And also, if you ever wanted to buy a property in France, maybe start looking into it now, because prices are coming down drastically, day by day, by the looks of it. 1,120 agencies, real estate agencies, have already closed due to bankruptcy issues in France. But they're keeping very silent about it in France right now. While everybody's focused on protesting, behind the scenes, things are crumbling. Everybody's focused on protesting against each other. The retail section are just looking at each other. The retail section are pointing fingers at each other. Isn't that interesting? The people that we trust to lead our countries, the people that we trust to make sure that our families are safe, the people that we trust with our tax-paying money, the people that we trust to keep our children safe, the people that we trust for everything, have messed up everything. And we, as the people, have decided not to point the fingers at them, the people that we trust for everything, on keeping us safe, on feeding us, on essentially using our tax dollars or tax pounds, British pounds or euros in the safest possible way. But we've decided to point the finger at each other. Nobody's looking up. So while we're all looking at each other and pointing at each other and going, you are the problem, I'm failing in life, they are laughing at you pretty much. Honestly, while people are pointing their fingers at the person next to them and going, you are the problem, I can't make it in life, the person on top of you who's been using your tax-paying money, who's apparently supposed to use that taxpayer money to fix your roads, fix your economy, keep your children safe, and keep you safe, have done absolutely jack squat for you. And instead of pointing a finger upwards, people are pointing at each other. And while people are pointing at each other, the economy is crumbling right around you. It's an amazing world we live in. Now, I think I'm coming down with a cold as well. Now, that's due to a voice change. The US dollar is going through some sort of situations as well. The US dollar's global reserves share falls to 59% this year. The US dollar is losing its grip on the world. In 2024, its share of global reserves dropped to 59%, down from the 72% in 2002. That's a 13% decline from the last 22 years. It's quite a major drop, I'll be honest with you, quite a bit drastic regarding the US dollars. The numbers are clear. And this is due to the BRICS nations. So the numbers are, look, before, apologies everyone, before I read any further on this matter, also everybody remember when I talked about either empire falls or empire restarts, essentially, I mean, empire adapts. And when I talk about empire, I'm not talking about, someone thought I was talking about Star Wars. I'm talking about like a Roman type of empire, British Empire, Persian Empire. Look, it's either empires fall in terms of the Persian Empire, the British Empire, the Roman Empire, this type of empire I'm talking about. It's either the empire falls or the empire adapts, is what I said. And I said, right now, the empire of the world is pretty much the US markets. It's the US. The Bank of International Settlements once said, when the American markets sneeze, the world market catches a cold, which is facts. So right now, the empire of this world is the US. And if the US falls, then China will essentially take that lead. As laughable as that might be to you, but that is a scenario of a possibility of happening. So I said it's either empire adapts, which means the US adapts to what's happening around it, or empire falls, which means the US falls and China starts taking over. Because BRICS, as I said previously, it's not about a collective of groups. It's only about China. That's just all it's about. It's about China or Russia taking the lead. Inside of BRICS, nobody cares about the other BRICS nations. It's either China or Russia trying to take the lead, and more likely swinging towards China. So they are really trying to push the US out of its position. And if the US doesn't wake up fast enough, we could be under the Chinese authorities in given 10 years' time. The US dollar is gripping it's losing its grip on the world. In 2024, its share of global reserves dropped to 59%, down from 72% in 2002. That's a 13% decline over the last 22 years. The numbers are clear. Countries, especially those in BRICS blocks, are distancing themselves from the US dollar. During the same period, China's yuan inched up 3%. Obviously, China wants to be in charge. They don't like the US being in charge. China wants to be in charge. Now, a lot of people would assume that's a good thing. Let me just make one thing clear to everybody that hates the US. And please don't look at Sleepy Joe as an example, because it's a terrible example. But let me just paint everybody a picture that thinks the US going down is a good idea. Just a very small picture I'm going to paint for everyone. So let's just say the US economy falls and BRICS gets bigger and bigger and bigger, which means China's dominance will get bigger and bigger and bigger. Let me just paint you a picture. You know how everyone in today's world, in today's society, even this week, let's say, this week, for example, has been so many scenarios in this world where the censorship is getting out of hand. People can't say certain things in certain countries, and you'll be arrested for putting a comment online. But here's the thing. These are all things that already have been happening in China, okay? You've just started to experience, is what I'm trying to say. You just started to experience censorship. You started to experience that maybe you don't have freedom of speech. You started to experience these things. With China being in control, these things will be heightened. In China, you can't do certain things, you can't use certain websites, you can't say certain things from the dawn of time. So if you're thinking to yourself, the US falling is a great idea, the US falls and blocks takes over, it's a terrible idea. Because if you think you're struggling now because you don't have freedom of speech, because you can't put a comment on social media, or because you can't say what's on your mind, and you think, what I'm going through now is difficult, imagine living under China's regulations. Imagine living under China's dominance. Because right now we're living under the US's dominance, and you might think it's terrible. But under China's dominance, it'd be 10,000, genuinely, it'll be 10,000 times worse. 10,000 times, it'll be 1,000,000% worse living under China's dominance. Because if you think this is bad, living under the US dominance, you don't know what bad is and you've never experienced bad. Because if you've ever lived in your entire lifetimes inside of a country where you can't speak out at all, forget about putting a comment. You've got to have the kahunas the size of an elephant to put a comment on online social media. At least you can put a comment on social media, but you've got to have the kahunas the size of an elephant to put a comment on social media if you live in China or any other country that has similar regulations to China. Okay, so if you think what you're going through right now is difficult, and because you don't like the way the US or the UK is running the show, it's about to get 1,000,000 times worse if we have the blocks nations running the show, because China is 1,000,000,000 times worse. At least you can type online. On the regulations similar to China's regulations, you can't even visit Google. And you think not putting a comment on Facebook is bad. You can't even say Google. You can't even have access to a search engine. You would have to access to a government search engine. If you've never experienced living under control, don't beg for it. Okay, because right now people are begging for control. Don't beg for those types of scenarios. Honestly, I'm telling you right now, most people haven't experienced living under a controllable government. I come from a country by the name of Iran. So I'm Persian. And in Iran, it's restricted. Everything is restricted. Everything you want to do in life is restricted. Freedom of speech doesn't exist. If you try to write freedom of speech on a wall, they will arrest you for it. Forget about saying you have freedom of speech. You can't use certain websites. You can't say certain things. You can't do certain things. You can't wear certain clothes. You can't wear shorts on a sunny day. They'll arrest you for wearing shorts on a sunny day. These are types of restrictions you would get. And people think it's bad. I can't put a comment on Facebook. And I'm not even exaggerating. Oh, he can't wear shorts on a sunny day. That's not a big issue. These are small things, very minor things. But you can't do basic human things because it goes against what they say. So you haven't experienced restrictions. For anybody inside of this crypto space that's rooting for the blocks nations to take over and the US to go downhill, if the US goes downhill, China's dominance will get bigger and bigger and bigger. And the restrictions will get 10 times worse, 10 times worse, 10 times worse, 10 times worse. You do realize that. That's the picture I'm trying to paint, essentially paint for everybody. That's the picture I want you to have in your heads. That is the worst type of life you can possibly have. Honestly. And you think putting a comment online and getting restricted for it is the end of the world type of scenarios. You haven't experienced restrictions before. So for anybody that's rooting for the blocks nations to take over, I don't know why. I really don't know why. Because if you're already struggling with the regulations that are in place right now, imagine what they'll become when the US dollar goes down, when the dominance of the US market space goes down and China's market space grows. It'll be 10,000 times worse. But obviously they'll paint you this picture that, China's a great place. And no offense to Chinese, I love Chinese, I have Chinese friends and so on. But it's the governments that have always had issues. Majority of governments that, aren't good people. But also, everybody paints a picture that living in, essentially under Putin is a great life as well. Not really. Everyone paints a picture of living under China's authority is a great life. Not really. Everybody paints a picture of living under those, in Iran's regime type of situations is a great life. Not really, in any sort of a way, at all. And, if you're one of those influencers that keeps on making these videos, BRICS are taking over, US dollar going to zero, you're a moron. Why are you creating these types of videos that are saying, essentially BRICS is taking over, US dollar going to, especially I've seen American influencers do these videos. BRICS taking over, US dollar going to zeros. That's a terrible life. First of all, you live in the US, which means the dollars that you have in your pockets and your bank accounts goes to zero, pretty much, which means the US goes through a massive crisis and you won't be able to afford anything. So I don't know how that's positive in any type of scenarios. China growing in dominance, you living in the US rooting for China. Make it make sense. Honestly, there are people in the US rooting for China. There are people in the US rooting for Russia. There are people in the US rooting for the country opposite them. If you're rooting for the country opposite you, that means your country will go downhill. And if your country goes downhill, you live in that country, which means you will go downhill. How do people not understand the logic on that basis? So I've seen so many people still creating these videos, oh, BRICS is taking over, US dollar going to zeros. You live in the US. If US goes to zero, you go to zero. Does not comprehend in anyone's head. Does not comprehend in anyone's brain. If the US economy goes to zero, you go to zero. And you're rooting for the other side. The US dollar is losing its grip on the world in 2024. And I'm fully aware they've been printing too much. They're extremely greedy. Okay, I'm fully aware the US has been printing too much dollars. They've been essentially abusing their power. They've been abusing their power for themselves. They've been abusing their power on war. And of course, I'm fully aware of those types of scenarios, but it'll be 10,000 times worse on the China's authorities. Because at least the US does it publicly. I'm being very honest. The US does it publicly. If the US wants to go for a country on a war type of basis, they'll do it publicly. China, silently. What type of government would you rather want in control? What type of dominance would you rather have? A government that does it silently or one that does it publicly? So the US dollar is losing its grip on the world. In 2024, its share of global reserves dropped to 59%, down from the 72% in 2002, and that's a 30% decline over the past 22 years. The numbers are clear. Countries, especially those in the BRICS blocks, are distancing themselves from the dollar. During the same period, China's yuan has inched up 3%. The US dollar has been the world's leading reserve currency since World War II. Today, it still represents 58% of the value of foreign reserves holdings, but the writing is on the wall. Before I go through that, let's just go through that comment. Miles, should I start my own crypto coin? If you want to. I come from Iraq, but I live in Sweden, so I know what you mean and agree with it 100%. Let's go, Kamal. But I haven't seen a Chinese person talking bad about China, and people who live in China or just on holiday are happy with China. Freedom of speech doesn't exist, is not only in China. Yeah, the reason why the people in China have never said anything bad about China is because nobody has the kahunas to say anything bad about China. I'm being genuinely honest. The reason why they'll never say anything bad about it is because fear, it plays a major factor into it. A major factor into it. You haven't met the right Chinese people. The ones that fully on live here, and they'll tell you and paint you a different type of picture. BRICS, and I've worked with a lot of Chinese developers in terms of blockchain technology as well, in terms of other tech firms I used to work with alongside me. They paint you a very different picture of the life they had and the amount of control that was upon them, and that not a single one of them would have dared to talk bad about their economy or about their country or about their flag. BRICS, and they were basically robots. BRICS and their de-dollarizations. The BRICS nations have been the loudest in calling for a move away from the US dollars. Over the past 2 years, they've ramped up efforts to promote the use of their national currencies in trade. And, obviously the whole BRICS gimmick is just one big lie. BRICS, as I've said, basically, the BRICS talks about collective basket of tokens. So once again, they're talking about here as well. The BRICS nations have been the loudest in moving away from the US dollars. Over the past 2 years, they've ramped up efforts to promote the use of their national currencies. No, they haven't. And I've explained this once as well, and I've put a stop to this misinformation lie that keeps on coming out of BRICS. Okay, the BRICS nations are the type of countries you cannot trust. The majority of them are two-faced countries. And let me explain a very simple scenario of the token scenario of national currencies. The BRICS nations always pride about national currencies, and they say we should move away from the US dollar and use our own national currencies. And that is why a lot of people, go towards BRICS, and they say, well, BRICS is a great idea. countries come together, everybody uses their own money, everybody's money has value, and it's not just the US dollars. And this is the rosy picture they'll paint for everybody, that when they talk about BRICS, and this is the rosy picture the BRICS nations will talk about as well. They go, oh, well, everybody has a choice, everybody can use their national currencies, why should we use the US dollar only? That's the picture they'll give you, the happy ending. And here's the bitter ending that nobody's talking about. The bitter ending is they talk about a collective basket of tokens, but there were transactions that were made between BRICS nations themselves, the OG BRICS nations members, India, essentially South Africa, Russia, and China, and Brazil. These are the original members. And they talk about national currencies and a collective basket of tokens. India and Russia did an oil trade with each other, and obviously India wanted to pay using Indian rupees. No, I mean, it makes sense. National currencies, everybody gets to use their own national currencies. That's the whole BRICS motto. You know, their slogan is national currencies pretty much, and moving away from the US dollars. So India tries to do an oil trade with Russia, thinking, you know, why not pay with Indian rupees? BRICS nation, BRICS members, original BRICS members, and Russia rejects Indian rupees. And Russia says to India that your currency is pretty much worthless, and we would rather accept from you Russian ruble, some in Russian ruble, and the rest in US dollars. Doesn't that go against the whole moving away from the US dollars? It's all about national currencies, a collective basket of currencies coming together. But you're rejecting an original BRICS member, not accepting their Indian rupees when they want to buy oil from you. India goes to buy oil from Russia. Russia says pay some in essentially rupees and the rest in dollars, when India tried to pay it in rupees. Sorry, Russia asked to pay some of it in Russian ruble and the rest in US dollars. And India said, well, I thought we could pay with rupees. And Russia said, no. But obviously their slogan is national currencies. You see, these are the scenarios, these are the things that they don't tell you about the BRICS nations. And obviously they'll paint you that picture of national currencies where everybody has a choice. It's got nothing to do with that. Look, China's going to take over. BRICS is all about either China getting that dominance or Russia getting that dominance. It's got nothing to do with countries coming together. We don't live, for everybody out there, stop living in that la-la land and thinking that, you know, we're all going to go and holding each other's hands as nations, singing songs and running on a field. That's not a scenario, okay? That scenario is never going to happen. It's never going to come to a reality. In reality, it's the US falls, Russia or China takes its place. Or it's either the US adapts and Russia and China sit back down. So that's why I said it's either empire falls or empire adapts. And when I say that, I'm talking about a scenario of like the Persian Empire or the British Empire or the Roman Empire. And now it's pretty much the US Empire that's leading the charge, the market space and everything about it. So it's either empire falls or empire adapts. And if empire falls, Russia or China will take over the dominance. Not BRICS. There's no such thing as BRICS when the time comes. Trust me, when the time comes, there'll be no such thing as BRICS. It will just be Russia or China taking dominance. And if empire doesn't fall and the US markets adapt and empire adapts, there's Russia and China sit back down. But it also goes back to something that I said a very long time ago. I said this a very long time ago. I said, if you want to look at where your countries are headed, this is what I said in 2023. I said, if you want to look at where your countries are headed, just look at China in terms of the restrictions, in terms of the CBDC, social credit systems, and everything else about it. I said this in 2023. I said, if you want to look at where your country is headed, look at China. In terms of CBDCs, in terms of social credit systems, in terms of the restrictions online and so on. But that is where they're all heading towards slowly as well. But obviously 10,000 times worse under their dominance. And if you're thinking to yourself, well, I don't want to live under anyone's dominance, unfortunately, we don't live in a world like that. Someone always has to be in control, unfortunately. Obviously, I would prefer that everybody was on the same playing field, but we don't live in that world. In the world that we live in, one person has to always be in control of everybody else. So it just comes to the decision of who would you rather have in control, China or Russia or the US. There are people in the US who are protesting and voting and essentially saying that we prefer Putin. You know, there are people actually in America who are siding with Russia, who are siding with China. And they've never experienced living in Russia or living in China, but they're siding with Russia and China. That little protesting that they were doing in the US, yeah, try doing that protesting under China's authorities or Russia's authority and see how that protesting goes. They've never experienced it. Honestly, people who are protesting in favor of Russia or China or even Iran have never experienced restrictions. Try protesting the same way you did in the US, in Russia and China, and see how that protesting goes. I'll guarantee you that protest will come to an end within 5 minutes. If that protest was happening in China or Russia, within 5 minutes, that protest would have come to an end. But there are people actually in the US protesting to side with Russia and China. Extremely odd. So, regarding the BRICS nations, BRICS and their de-dollarizations, the BRICS nations have been the loudest in calling for a move from the US dollars and promoting their national currencies, apparently. China, in particular, has been pushing hard to expand its cross-border interbanking payment systems, CIPS. The goal to create an alternative financial infrastructure that doesn't rely on the dollar or SWIFT, the global financial messaging networks. The CIPS has been growing fast between June 2023 and May 2024. 62 new participants joined the system, bridging the total to 142 direct and 1,394 indirect participants. While SWIFT is still the big dog with over 11,000 connected banks, CIPS is making moves. China pushes to use the yuan in international transactions is a direct challenge to the dollar's dominance. And while the yuan's share in global reserves slipped slightly from 2.8% in 2022 to 2.3% in 2023, the push for de-dollarization is gaining traction. The BRICS are also exploring new payment systems that could further reduce the resilience on the US dollar. Talks are ongoing about the potential intra-BRICS payment systems. The system could include cross-border payments, central bank digital currencies, CBDCs, and currency swap agreements. Is the dollar's dominance actually under threat? Question mark. The dollar is going down without a fight, which is the interesting part. Honestly, the dollar is not going down without a fight. The Atlantic Council concluded that the US dollar's role as a primary gold reserve currency is still secure in the near and medium term. The dollar continues to dominate foreign reserve holdings, trade invoicing, and global currency transactions. The euro, despite best efforts, isn't a real threat. Neither is the yuan, at least not yet. The dollar's dominance isn't just about the reserve holdings, it's deeply embedded into the global trade and financial transactions. The US dollar is still the currency of choice for settling international trade. And even though countries like China are pushing for alternatives, the infrastructure supporting the dollar is massive. This is why the dollar remains strong reserves, trade, and transactions, despite the efforts of its dethrone. Despite China's best efforts, the yuan is still seen a risky bet. Concerns about China's economy, its stance on the Russian-Ukrainian war, and raising tensions of the US and G7 countries are holding back the yuan's rise. Reserve managers are cautious, and this has kept the yuan's share of global reserves relatively low. Even as China pushes for more international use, gold is also making a comeback. Nearly a third of central banks plan to increase their gold reserves in 2024. The 2022 sanctions on Russia showed that not even the euro comes with a geopolitical risk similar to the dollar. This has driven some reserve managers to look to gold as a way to de-risk their portfolios. While gold can't replace the US dollar, it's becoming an important part of the equation as countries try to diversify their reserves. So what does it take to be a reserve currency? Stability, liquidity, and trust. The US dollar, it has these in spades, which is why it's held the top spot for such a long time. The International Monetary Fund's special drawing rights basket includes the dollar, the euros, the yuan, the yen, and the pound. Among these, the dollar still outshines the rest. So, China's really pushing for this scenario of a yuan getting to a stage where it wants to be used. The US dollar is trying to hold its ground. We would have to see how far they can hold their ground for, but that was the picture I wanted to paint for everybody that's rooting for the other team to win. It's a bit odd for you to be essentially voting for the other side. Never makes sense to me. I don't know how brainwashed you can get to vote for the other side. Genuinely makes no sense to me. How brainwashed can you get to be voting for the other side? It doesn't make sense at all. Genuinely. How can you be in the US and rooting for China or Russia? How much brainwashing did it take for you to be rooting for the other side? Where if the other side wins in that outcome, you go to zero. So how much brainwashing does it take for somebody to be essentially rooting for the other side? Because honestly, if the other side wins, Russia and China win on the other side, they start taking over the dominance, the US economy goes to zero. So how much brainwashing did it really take for that? Doesn't make sense. The people that are protesting, honestly, doesn't make sense to me. Also, for people that don't know this either, Iran does make quite a lot of investments in protestings. If you didn't know that, now you know. Also, Iran is fully in favor of Kamala Harris. If you didn't know that, now you know as well. Iran has always been in favor of Joe Biden because Joe Biden is a pushover, and obviously Iran could easily manipulate Joe Biden to do certain things. These wars that have started are actually in favor of Iran and America. Also, Iran is fully in favor of Kamala Harris, and there's probably some donations being made through third parties and shell companies to Kamala Harris from Iran's government as well. Iran is completely against Donald Trump because if Donald Trump comes, then the Iranian regime will be cut from its roots, pretty much. Genuinely, the bloodline of the Iranian regime will just come to an end if Donald Trump is chosen. But yeah, if you didn't know that, now you know that the Iranian government does also make some donations through shell companies and third parties to American politicians to weigh in outcomes. So you're somehow seeing Kamala Harris going through the ranks. Yes, she is being funded by tech companies and apparently the retail section, but some of those third-party payments are coming from shell companies, and those shell companies come back to Iranian oil heads. If you didn't know, now you know that the Iranian government does fund certain. The Iranian government funds protesting, sometimes different countries. Some of these random protests that start up are sometimes funded by the Iranian government as well in these Western countries. That's what the Iranian government does. I know because I'm Iranian and I know how they operate. The Iranian government is very manipulated, very manipulated. Their manipulation skills on a whole new other level. So, after painting you that rosy picture, stick to the US dollars, even though the dominance might be quite bad, but it'll be 10 times worse under their dominance because you haven't experienced restrictions, and trust me, you don't want to experience restrictions. So, on tonight's live show, we talked about the US dollar's global reserves and how they're still being pushed down and the yuan is still trying to take over. We talked about something major that's happening, which was the French economy. If the French economy starts spiraling downwards and many essentially real estate firms start piling up for bankruptcies, Chapter 11 bankruptcies, this could definitely damage the French economy and also put pressure on the market space as well. You heard it here first. If the French economy starts going through some bankruptcy situations in terms of real estate, you know why, and you know what to do inside the market space next, which means buy low, in other words, not financial advice in any sort of way, but definitely check out I'll definitely keep you updated on the French economy as well, because it's going to have a major play inside the market space. It is a real estate market. We also talked about Wells Fargo on tonight's live show as well, how Wells Fargo essentially is entering the fields inside the crypto space. They're following the footsteps of Morgan Stanley, which is quite big news as well. Not only Wells Fargo, but UBS Bank is doing the exact same thing, and 6 other essentially Wall Street firms are also entering. 3 for now and the rest coming on later. We also talked about tonight's live show regarding the African unions essentially approving AI technology. Africa wants to become a massive AI hub. We also talked about Hong Kong tightening their crypto regulations even more than ever possible, which means they're getting ready for a substantial amount of institutional investors coming into the fields. We also talked about the US, regarding US inflation data that's going to be coming out next week as well. That's definitely going to be having a massive impact on the market space. But we also have one more as well to go through, which is this. We also have one more to go through as well, which is this. $1.7 billion, just one more news to go through as well, which is this one. $1.7 billion in Bitcoin is leaving exchanges. So there's something quite odd happening as well. I think by mistake, I must have skipped on this. But there's something interesting happening inside the market space. $1.7 billion in Bitcoin is leaving exchanges. Is the market in danger? Question mark. The crypto market has just experienced a significant shake, marked by an event that does not go unnoticed. A massive movement of Bitcoin out of exchange platforms is happening. This exit reveals a deliberate strategy by major investors who seem to be doubling down on their confidence on the future of Bitcoin, despite the recent market volatility. But why this sudden withdrawal, and what does it mean for the evolution of Bitcoin's price? A massive withdrawal of Bitcoin from exchanges. Over the past 7 days, these are data. Over the past 7 days, the crypto market has witnessed a historic exit of Bitcoin from centralized exchange platforms. More than 28,000 Bitcoins, equivalent to $1.7 billion, were withdrawn, marking the largest outflow of this year. In the past 7 days, we've just had the largest withdrawal from exchanges. The significant movement is reflected in the drop in the net flow, a key indicator that measures the inflow of outflows of cryptocurrencies on exchanges. This massive withdrawal potential signals a change in sentiment among the whales as well. These investors who hold large amounts of Bitcoin, this type of movement is often interpreted as a desire to secure the assets outside of exchanges, or to reduce the exposure to risk associated with centralized platforms. Whatever the exact reason, it suggests that a strategic such a reassessment by the most influential market players, even as the price of Bitcoin hovers around $60,000 after a recent sharp drop. The anticipation or simple precaution. The magnitude of these Bitcoin withdrawals cannot be underestimated as we head straight towards a possible supply shortage inside the market space. Indeed, when such large volumes leave exchanges, it reduces the available liquidity for daily trades, creating a dynamic where a sudden surge in demand could exacerbate essentially price fluctuations. This phenomenon could fuel a bullish cycle where perceived scarcity pushes Bitcoin's price to new heights. Nevertheless, this is not the only possible interpretation. It could also be a threat to those investors that are anticipating a prolonged phase of volatility or that are seeking also to protect their holdings from upcoming turbulence by withdrawing them from exchanges. So, massive withdrawal in the past 7 days has been happening from crypto exchanges. About $1.7 billion just in Bitcoin has been withdrawn from crypto exchanges. The conversation strategy outside of these centralized platforms could also indicate renowned confidence in Bitcoin's long-term potential. At a time when regulations are tightening and exchange platforms are increasingly being monitored, the decision to store Bitcoin outside of exchanges could also be seen as a precaution against regulatory uncertainties. The long-term implications of these movements could be vast, ranging from upward pressure on Bitcoin's price to increased market volatility. What we are witnessing here could be very well be the prelude to significant changes in the market dynamics as Bitcoin continues to evolve as the global reserve assets. So, something major is definitely brewing. As Shelly just said, Shelly, you just took the words right out of my mouth. Something seems like is brewing. Yep. Something is definitely brewing without a doubt. If in the past 7 days, $1.7 billion being withdrawn from the crypto space, from exchanges, the amount that was just withdrawn in the past 7 days hasn't been withdrawn since the dawn of time when Bitcoin was invented until now. So in the last 7 days, massive withdrawal. That's pretty much the outflow doesn't match up to any of the outflow we previously had. This is the largest outflow we've had, and it's been the past 7 days, a withdrawal. So something is definitely in the works, without a doubt. There was something definitely brewing. Is this due to the amount of regulations coming in place? Could be a possible outcome. We're getting so much more regulations in place, which means centralized exchanges are going to become a lot more tighter on regulations, which means it might be the reason why they're withdrawing their Bitcoins. Well, if that's the case, if the case is that exchanges are going to become very, very restricted, and this is the reason why we've just had the biggest withdrawal from exchanges ever possible, then it's also a sign that we should be essentially on the verge of how close we are to regulations and how close we are to that institutional clientele entering the crypto space. Or is just this a sign of scarcity keeping the price up? Or is it a sign of confidence for them, or is it because of this war scenario or inflation data? There's many outcomes on the table, but the few that you can weigh into is the regulations. It's the regulations probably the reason why they've withdrawn all their assets from exchanges. So those are things that can play in. If they're doing that and we get massive amounts of regulations coming in, which is what's possibly happening. This year is all about the world, essentially shifting over completely to a digital era. So that could be the reason why they're doing it. That exchanges are about to become extremely strict, which means institutions are about to be entering the field. More regulations means more institutions as a safety net for them, which means more money entering the crypto space. They dare not. Yep. When I was talking, my suppliers, they promoted me visiting Shenzhen for business, and they would only say good things. Even if I asked the downsides, they wouldn't respond. Straight control. Exactly with us. Let's go. I heard when they leave prison, government sends them to Africa and cannot go back. Move to the center of Thailand. There's no control around it. Hello everyone. Sorry for being late. Scott, good to see how you're doing. Miles, I can hear it. That's not me. If the biggest founder for the Chinese army is NATO, America, we are now see Russia and China are now besties waiting to replace the dollar. Are we not being played here? Yes, we are. Seems like something is brewing. Yes, it is. Good night, Miles and CMF. Thank you once again. Take care, Mike. See you, brother, tomorrow. Same time as usual. See you tomorrow, brother. Same time as usual. Miles, does that mean that they have sold BTC or something else? No, they haven't sold their Bitcoins. They've withdrawn their Bitcoins from the exchanges. In other words, they've taken their Bitcoins out of exchanges like Binance and Coinbase and put it inside their Tangent wallets or Ledger wallets, which causes a scarcity, which means that essentially there won't be enough Bitcoins in terms of supply and demand for purchase on exchanges, which makes the value of Bitcoin rise in price. Withdraw to hard wallets or outflows usually mean so. No, withdraw to hard wallets. Withdraw to hard wallets, cold wallets. I have my headset on. I heard something. To hard wallets, which means the supply and demand situation is going to cause a scarcity on price, which means Bitcoin would go up in value. If they're taking out $1.7 billion worth of Bitcoin from exchanges, there won't be enough in terms of buy and sell, which means if somebody wants to buy or if a lot of people want to buy, there won't be enough, which means the price of Bitcoin will rise in value. Supply and demand. If demand goes up, there's not enough supply, price goes up. So we have come to the endings of tonight's live show as well. If you enjoyed this live show, drop a follow, drop a like, and tune into it every single night. It's called the CMF Live Show. This was episode 125 of the CMF Live Show. If you enjoyed it, drop a follow, drop a like, and tune into it every single night. We talked about quite a mixture of topics on tonight's live show regarding the withdrawal of Bitcoin, regarding the BRICS situation, regarding Hong Kong's and regulation tightenings. We talked about some other market spaces regarding the African continents. We talked about Wells Fargo. Quite a mixture of news we from tonight's live show. If you enjoyed it, drop a follow, drop a like, and tune into it every single night. And the French economy as well, which I'll be updating everybody on. This is the CMF Live Show, stands for Crypto Mouse Family, and we also have our own Telegram group as well, which anybody's more than welcome to join the CMF on Telegram as well. The link is on the link is on essentially X for the Telegram group, or on YouTube, depending on where you're from, depending on where you're watching it from. Miles, do you use a script? No. Well, here's the thing. This is what I do use. So this is the news that I do read from. So every night before I start this live show, 2 hours before I start this live show every night, I draft all the news, all the key points of the news, all the bullet points, and I do this on notes. So these are all the notes that I've just went through on tonight's live show, and it's all from today. So every night before the live show, 2 hours before the live show, I prep. Before I start the live show. These are all the notes that I've just read out on tonight's live show. And this was for today. They're still going on. This was for today. Still going on. Okay, now if we go out of this. So if we go out of this. These are, as you can see. Each one of these boxes is 1 day. So this is episode 125. That's episode 124, episode 123. If you click on it, for example, it brings up the notes from yesterday's episodes. These are all the notes from yesterday's episodes now. And if we go back, every one of these boxes is one episode that we just did from every single day that we just went past. Every one of these boxes is dated and timed. If you click on them, for example, this one randomly, there we go, notes on that episode. And I save all of them. So, and there's so many, I mean, it just goes on. So that's how I prep for this live show. But the context that I give is on the spot. The news is obviously the news, but the perspectives are all mine on the spot. Good night, Miles. Great the show. Thank you, brother. Let's go. See you tomorrow, sometime as usual. Woodhouse, let's go. Good night, all. Troy, see you tomorrow, same time as usual. Good evening, Miles and CMF. Thanks for all the info. Let's go. Free forever. See you tomorrow, same time as usual. Good night, Miles and CMF. Carol, see you tomorrow, same time as usual. Wow, let's go. Cheers, Miles. When we see XRP reach agreement figures, we've got to wait for 3 green lights. Oh, there's a lot. Yep, there's a lot. Good night, Miles, and good night, Miles, and to all the CMF, and thank you for all the news. Let's go, JP. JP, see you tomorrow, same time as usual. Cheers, Miles. Big time. Let's go, Woodhouse. What app is that? The notes? Yeah, this is my notes. So this is notes. This is a Samsung, that's why. But this is notes. So each one of these is, if you click on them, is one day. But this is the notes app. Thanks, Miles. So yeah, Larry, that's the notes app. Thanks, Miles, for doing all this for us. Much appreciated. You're the best. Shelly, thank you so much for the kind words. See you tomorrow, sometime as usual. Night, Miles. See you tomorrow. Pablo, see you tomorrow, sometime as usual as well. What about the intro? I did the outro. I'm about to do the outro now. Shelly, see you tomorrow, sometime as usual. Am I missing the show notes? Well, Miles, let's go, Larry. Larry, thank you, brother. See you tomorrow, same time as usual. I will see everybody tomorrow, same timing as usual. Everybody have a great day or a good night, depending on where you are around the world. I'll see everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. This has been a CMF live show. Notes out 100. Got it. Yep. I'll see everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you are around the world. See everybody tomorrow, same time as usual.